Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hi, everybody. It's Victor here again, and welcome back. Another week, and nothing much happened from trading front, so to speak. But everything is related or concentrated on the coronavirus, what's happening in China. And there was great hope this week of some people will be allowed to return to work. But a lot of places reportedly to be more or less still a ghost town. And that was not unexpected to me anyway. Because if you have 26 towns or something, cities, that's been in a lockdown, and then people start going back to work. Each of the cities, have their own rules basically to control people moving in and out. Just try to control the amount of people who are sick going back out into the wider community, so to speak. So to basically the stock market expecting everything to be back to normal right away is a bit silly, I think. But from what I've seen so far, especially people talking among themselves in Hong Kong, and I said before, I go and search for Hong Kong news quite often, and a lot of it's on YouTube as well. But some people has been, look at the whole scenario, what is actually happening, and affect to not just China, how it's been shut down is affecting its own internal running of, of its own stuff, but also how it is related. The delay can cause other countries, having issues. I mean, there's already, I think, some car company in South Korea has already said they stopped manufacturing last week or 2 weeks ago because they ran out of parts, which is generally from China. And the other big thing that's been talked about in Asia, I think it's been raised last week in US, is a lot of generic drug companies that is based in India are running out of raw materials. The basic material for the drugs basically has been researched and created in America or Europe first, and then they get the patent basically ran out. And so India and I think China as well have been producing those generic brand, drugs with same ingredient, just non-branding, so to speak. And I think India is one of the biggest generic drug manufacturer in Southeast Asia, and they're having issues now. And some company is actually saying they have only enough supply until end of the month, and that is quite worrying because being generic drug, I suppose a lot of hospitals around the world uses those directly or indirectly because it's cheaper. And also, the other thing here is what does that mean to other countries who could not afford buy the full brand? What happened to the hospital treatment process if they run out of drugs, basic drugs, so to speak? And also, a lot of those raw material that is talking about here are also used for other like diabetes or HIVs or some other basic drugs as a base structure to produce more advanced drugs and materials as well, so for other diseases. So the effect is quite huge. Now if you just think normally a town has been locked down, and let's say only just one town in China, people will slowly allowed to get out, go back to work or another towns, and only after they have been maybe quarantined or been tested, they have no signs of, the current norovirus disease or something. And they probably do it in stages because the medical authorities in this particular town, for example, Wuhan, have so many people they need to look after anyway to actually spare more people to basically go around and check those people haven't got any disease, but make sure they haven't carrying any viruses with them or haven't got the temperatures and etc. It needs some time. So only a trickle of people will go back to work, and that is only one town. So let's say one town, okay, it's a main manufacturing hubs. Other towns will have their own schedule and way of releasing workers. I mean, in a safe environment and safe way. So it will, for manufacturers to actually, to get back to full swing of things, so to speak, start manufacturing stuff, it will take some time. Now, if you look back to the SARS virus back in 2003, it sort of detected a similar time frame as well, like October, November, and then it dragged on until May, June, the following year. So it started end of 2002, I think, and then sort of calmed down quite a lot in May or June, those time frame in 2003. So you talk about 6 to 8 months kind of episode, and obviously last time SARS is much more, deadly, so to speak, as far as I'm concerned, because everybody who got caught, they can get killed very quickly within a week. In the current virus, if you get detected early on, there's a good chance of recovery. And that's another thing the media is not talking about. That okay, there's large number of deaths, I think like 2,000 or something under 2,000, but a lot of people has recovered, thousands, I think 4,000 or 5,000. A lot of people get detected and they have shown symptoms of very mild flu kind of things, and that is the thing. But in the Western world, people just keep on talking about how much people got infected and how many deaths is going on around the world, how many deaths, so to speak, and they haven't talked about how many people recover. Let's say in UK here, there was 8 cases or something, and 7 of which have been recovered. That's only 2 weeks or 3 weeks ago. When they were first detected, only 1 is still in serious condition because they have preconditions or a health problem before. So it's treatable, but there's no one drug to actually treat that type of virus. Remember, it's flu type of thing. So just like flu every year around the country, there's no one vaccine that will just kill the flu. Per year, every year the flu mutate and do its own things, and all you can do is maybe have a basic drugs that prevent it, but it's only a preventative drug measure and it won't kill it. So same thing for the norovirus. Coronavirus is a similar thing as far as I'm concerned. So going back to the possible delay to the manufacturing in China, this that knock-on effect to around the world in supply chains, to Southeast Asia and back to Europe and America, is going to take some time to actually come back to full swing. Now, depends on which industry you're in. Some of it, like the car parts, they've been running around quite lean to produce not many inventories, so they're affected really first, and so is smartphone and stuff. But the other thing is also Apple. Apple has been well known. I think Jim Cook was one of the person who introduced this very lean inventory model. So I think they only have like a week or 2 weeks stock held in a depot or something for Apple, so that they don't have to have to basically put too much money into the inventory, so to speak, and then use those cash for something else, that kind of thing. So when the machine is working really well, you don't have this supply chain issue. But when it's not, just look at the car plant in South Korea. They just couldn't manufacture. A similar thing for Apple. People's running out parts, bits and bobs here. So how can they, also with people, not enough people working. So the launch of cut price of iPhone 11 or something, it's going to be delayed, probably next quarter instead of this quarter coming out or something. And it's not going to effect on other things like earphones or other products, that kind of stuff. And not just one company, and you have to look at other companies as well. And the knock-on effect could be quite huge. America and Europe probably don't feel it at the moment because of the trade war. Especially America has been importing a lot of foreign stuff from China first, products from China. So there was talk last year of there's over cargo, which is imported into America. They got no place to put it in the port in America. So there probably may be a backlog of inventory that America was still able to use, maybe 3 to 6 months. But it's coming. The pinch will be coming. So you don't feel it. Most people don't feel it. And probably until maybe next quarter, that kind of thing, when you start to see things. So end of the year, you probably see the price going up a bit more, so somewhat. And mainly because it's not really for... I think it's not because of the tariffs issue between China and America. It's mainly because of the delay, and then some places are bit price up and so forth. And the other funny things that it's a side thing. It's not really funny, but it's a side thing that's actually happening. Is a lot of people because worry about the virus has been ordering face masks, and they couldn't get anything even on Amazon. It's like delay until March delivery, that kind of thing. So those are just basic services. So now, as far as I understand, facial mask, some medical basic clothing and stuff are all manufactured in Southeast Asia, and I think China is the main producer for those. For Europe and around the world, they might run out of basic, clothing and medical gears kind of thing. And okay, they can buy them probably from the European counterparts, but probably cost a bit more. So over time, you basically see a ramp up of the cost of hospital bills around the world, because the cheaper version, so to speak, is not available for maybe 3 to 6 months or something. So that would be just like knock-on effect. And the other thing is in Asia, people start talking to something that's not even picked up yet. In Europe is okay. Europeans and Americans go to China to source certain products, and they have certain agreement, and they have to produce certain products in a certain time, right? If you don't produce in certain time, you get sued, and then you have to between court, and then obviously the smaller company have to pay up and so forth. So similar, using the same process, if you put in this delay now, the China manufacturer couldn't produce because of the virus issue. They don't have the manpower, and raw material is low. So whatever they sign up before, depends on what the contract is. Some might not be able to supply the product on time, and there might be some very heavy penalty clauses in there. So some smaller manufacturer in China might not be able to withstand it. So that's one of the reasons I think the Chinese government have been trying to pump more money into the banking systems, to allow the banks to lend more to smaller companies, so to speak. But there's so many small manufacturers. Chinese would have to pump loads of money into the financial system just to get this to get the smaller company able to borrow more money to basically have to pay some of that will have to get up to the bills of claims and counterclaims. So the smaller shops might close in China, causes some issues, and then the middleman, so to speak, they will probably have to claim and counterclaim from by big company from America and so forth. So this chain of claim and counterclaim will cause other issues as well. Not much people is picking up as well, and that will cause us problem with banks, mainly with local banks in Southeast Asia, like HSBC, Standard Chartered, those kind of thing, and also insurers who insure these kind of problems, providing who are both parties and counterparties have bought some insurance, and then something might have to someone insurance have to cough up some money as well, and counter insurance as well. So all these are linked side effect. You don't see much of it at the moment, but I bet you definitely will see a lot more of those affecting banks, the trading banks, not the buying and selling shares side, but more like a lending side, having issues on those, and it's slowly showing up, and it's quite is from my previous thinking, I think second half of the year will be quite difficult. Now, what I'm going to say next is the next 5 minutes or something is absolutely nothing to do with trading or whatever the market analysis. I just use logical thinking. I'm being Chinese from Hong Kong. We're quite into horoscope, so to speak. And the Chinese horoscope that I read have a certain yearly thing. They see how China is going, or Southeast Asia are going to be. And this year, one of the things they actually said is it's going to be quite a bit of issues. Issue as in there will be a lot more robberies, and also a lot more issue about food, not having enough food, feeding people, and so forth. Now, I don't normally put those two things together, but it's just like I read something totally different from trading, and then got something, some information back here, and what is actually happening now is sort of thinking about those. And being Hong Kong Chinese, people are saying, okay, you put two together, your supply chain issue and what the horoscope is saying. it could be correct. So we're waiting to see. But what I definitely see is there will be delay in manufacturers providing this what is signed up to do, and the produce we send to around the world will be delayed. There will be the supply chain issue, like I said before, and then now, like I said, the most thing is everybody's concentrating on beating the virus in Asia. How or if anybody out there farming, putting seed under the ground, so to speak, and try to grow the food. So let's say this whole thing go for 6 or 8 months in China. So second half of the year, China will be coming out and buying food, so to speak, from around the world. So the rice price or flour price or whatever price, sugar, those kind of things, the basic stuff will go skyrocketing because just so many people needing those basic produce to be fed, so to speak. In China, it takes time to plan those back to the system, so to speak, and so there will be some those soft commodity price increases coming up, the price inflation from there, and it's going to be quite a bit of a challenge for a lot of company, and to actually produce and supply those, because then if China takes a lot more in, America or Southern America, Europe, can they supply those? And then if they can, the price will still go up anyway, because it got so many people in the world, and China got a lot more, 1.7, almost 2 billion people. We're probably suffering similar fate, not having enough food to eat for second half of the year, and that is causing possibly one issue, that kind of thing. And the other thing is China. Having more or less shut down for 6 months, so to speak, for example, was they going to get income to pay for all these goods from other countries, euros, American dollars, and stuff. So what they do? They probably have to borrow more, print out more money. But the other thing that China have, at the moment, is quite a lot of foreign bonds, foreign countries' bonds, especially the U.S. nominated in the kind of bonds, government bonds. And I won't be surprised to actually see China is going to start selling some of those. They already been selling, I think, back in the middle of last year, slowly in triples. That's just one of the tactics, I suppose, on trade negotiation front. But because it now has a real need to feed its people and pay for the bills, pay for the imports, pay for the food and products, they will have to, another way is to start forcing a seller of those U.S. bonds coming into the market on the U.S. bond side. That means there's a lot more bonds available for people to buy, so the prices probably will go back down, and that's going to affect the U.S. dollar strength. And at the moment, because everybody go into U.S. dollar due to the virus issues, safe haven, go to America and put in the money into American stock market. But as the market sort of calms down and taking the stride with the virus issues that's slowly coming down, people will then get out from the American market as well. So if the China, being one of the main purchaser of U.S. Treasury bonds, start being forced by nature, so to speak, you need to feed these people, it will be having issues. So we will have to sell more of those bonds. So American dollars might go down, and American dollars go down. Everything that denominated in the American dollar will be affected. Then I think large inflation might be coming. That's just my possible logical thinking, that kind of thing. It's not really prediction. I hope nothing happens like that. But it's just like, I just wonder where China is going to get this money to pay for all this extra imports that it needs to feed its people. It can print more money than America does, but on also the current reserve, foreign reserve, they've got a lot more, euro, I think more in American dollars term than in euros term. But I have to start using some of those, and that will have a knock-on effect to currencies in America as well as in Europe, and we just have to see how it goes. And that sort of the end of my analysis for this week and what's happened. And coming up next is the update of the portfolio. Okay, first off the bat is Apple. Basically, Apple has been like last week. Buy all the way from short term, medium term to long term is a buy. Amazon, similar to last week, is a buy for short term, medium term, and long term as well. Aussie dollar continue weakness really. Short term is basically a sell, medium term and long term is still a sell as well. I think it has been last week or week before there was some um, uh, decision on the interest rate, and it hasn't actually gone. Basically, the Australian central bank didn't cut interest rates yet, so and then the basically Aussie dollar found a bit of support. So we just have to wait and see what happens here. For that, it's trying to do a rebound a little bit, but it's not big enough to actually rate it in any way that is and the tide turned, so to speak. But just watch out. Brent crude and normal American crude oil. Well, Brent crude short term has changed to buy now. Medium term is a sell and long term still a sell. U.S. crude WTI. Long term, medium, and short term is still a sell. Now, there's talks of, I think they are in meeting in OPEC countries to try to reduce on oil output, but American I think it's just continuing, and Russia is thinking about it. So there was some price increases, spike this week, but it's not much. But on the Brent crude side, it's showing its head, so to speak. It could be there's some turning on the crude price, but basically go back to the means. I don't see there's much, too much of demand around the world this year. Doesn't matter what the virus have done, but around the world is slowing down. Last year already slowing, and this year just going to continue that theme. So, I think that the price went down so much in crude oil is a bit overdone. Just a lot of panicking, but it does probably take some time to pick back up to medium term, that kind of thing. So just watch the space, so to speak. Next is DAX, and very similar to last week. Is more or less across the board is buy. So medium term is changed to buy now. So short term is a buy, medium term is a buy, long term is a buy. So we just have to wait and see. Dow Jones has been up and down, making new highs, so to speak. Now all across the board, medium, long term, short term is a buy. This is the kind of thing I'm saying. In the Western world, everything seems to be more or less everything's happy. Everybody's still dancing. The musical chair, pass the parcel, still working. But in Southeast Asia, because of virus issue, interaction between globalization, supply chain, so to speak, around the world. Should be affected, but Southeast Asia is feeling the pain now. The Western world don't seems to be. So Dow Jones seems to be just continuing to go new highs. So it's Nasdaq and S&P 500, those kind of thing. And I just wonder, what we're going to happen. But as far as trend following is concerned, we're not concerned about any other news except the price. So at the moment, the price in the Western market is still going up. We just got to stay along until the trend bends. That's as in the trend following. Remember, like I said in my last episode, trend following means finding a trend and follow it. You don't predict. You don't care what other people may say, so to speak, and you just wait until the market turns, until the price actually bends and bites on tail, so to speak. Then you get out. Otherwise, continue. So back to Dow Jones. It is buy across the board, medium, long term, and short term is all buy. FTSE 100, the short term is buy, and long and medium term is neutral, same as last week. Gold, short term is still a sell, but long and medium term is a buy. The gold has been gone up a little bit. Last week, Friday, I think, gone up to 1583, that kind of thing. So it's broken this 1570 range, so it's gone up a little bit more. So we just wait and see if this rally, short-term rally, or it's a long-term rally. Just have to wait and see. Then next is Hong Kong Index. Short term is a buy, medium term is neutral, long term is still a buy. So it just from what I see, it's very similar to what the SARS have done in Asia back in 2003. So initially there's a big panic, everything gone down when SARS first came up, but then there is some signals, some indication that the SARS itself is slowing down, or the rate of detection of death is slowing down. The market just rally back up because they've been too much. There's a similar thing here now for the norovirus. For the past couple of weeks, the Hong Kong market seems to be going up, even though we hear from BBC News there's a lot more deaths coming out from China and so to speak, all around the world. But the stock market in Hong Kong seems to recover a bit. So short term is for Hang Seng is a buy. Medium term is neutral. Long term is still a buy. Nasdaq, similar to the Dow Jones counterpart, is a buy for short term, medium term, long term. Nikkei, one of the little lights in Asia. Basically, short term is a buy, medium term is neutral, long term is a buy. So similar to Hong Kong index. But the other thing I was thinking of on Nikkei is, it's heavily car manufacturing, and obviously have closing with China, and I'm hopefully they don't have to shut down some of this car parts, manufacturing parts, so to speak. But probably there will be some sort of delay over there and causes some issues. So we just have to wait and see what happens. And also we have the Olympics coming up soon. How people go there early to prepare themselves. I believe other times when you just go to Brazil and other places, people from around, other athletes from around the world will go there like 3 months, 2 months beforehand to practice, just acclimatize, so to speak, get to know the place and stuff. So how does that go to work out when you have virus running around? It's obviously sure, anyone guess. But also, if because of virus causes reduce if tourism, going into Japan to attend the Olympic and as well as to sightseeing, that also have a knock-on effect on the Japanese economy as well. But for now, is short term is a buy, medium term is neutral, long term is a buy. Silver, a bit different from gold. Short term is still a sell. Long term, medium term is neutral. Chinese yuan, US dollar again, it's the Chinese yuan. Because of the norovirus, obviously, the China dollar is basically weak. So short term is a sell. Medium long term is neutral. So just wait until the price move. You don't do anything in there, I suppose. Next is USD against Japanese yen. The long term is a buy. Short term is a buy. Medium term is neutral. British pound against Japanese yen. Short term is a sell. Medium term is neutral. Long term is a buy still. And British pound against USD, short term is a sell, medium and long term is neutral. So after Britain have come out from Europe, is to have like 11 months to negotiate trading deals and common borders and so forth, and how to try to work with each other. So while this is happening, there will be probably a lot of brinksmanship, so to speak. Europe and Britain is going to stand firm on their grounds, and so definitely going to affect the British pounds for a bit. But near the end of the year, I think everything clearer. I think everything will still be in pounds favor, so to speak. But we just have to wait and see. For the short term, it looks like British pounds a bit weak at the moment. Bitcoin, a bit of some people out there already say it's going up. So short term, medium term, long term is a buy. So I've been reporting that for the past 2 weeks or so now. But from the charting point of view, there seems to be some resistance ceiling coming up. So from a trend forwarding point of view, it's still a buy across the board. But from a charting point of view, watch out. I think there's some headline resistance there for short term. So just go and check your chart and have a look. So that's the end of my podcast for my portfolio update and my DPL analysis. I hope you like it, and I speak to you next week. Bye for now.